Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, we've shown you how the government is about to kill the stock market with what they're going to do with the treasury balance. And now we're going to show you what they're going to do to the banks. You're not going to want to miss this. Very important information. So let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes. And if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. So Bob, all of this shuffling around with the debt and everything like that, and what the Fed's doing in particular, I think with their balance sheet, I don't think people are getting the ramifications of what that's going to do to a lot of these banks.
Yeah, Phil, I think, the tools that the Fed uses to kind of curtail banking activity one is raising interest rates, and two is to take money out of the banking system. They opted for both. And in a second, I'll show a chart here when they went into extraordinary measures for the pandemic response, and now they're trying to unwind it. But now they're creating a system. In fact, let's throw the chart up there so we can see it. You can see here where they left the trend line on the banking, and they actually just massive amounts of liquidity, in which then found its way into banking deposits. And then they started raising interest rates, Phil, and the banking deposits now are collapsing. At the same time, the Fed is trying to destroy banking reserves. And we're going to auger in, if you will, into a black hole. But that's not the only problem. And the next chart I want to show you is just the general weakness of the banking system itself. And it's just showing the smaller the bank, the more likely it is that they're going to underperform. And what's really interesting here is that a guy named Jim Girio on Twitter basically did some analytical work, or he referenced some analytical work that basically said if the banks had to pay competitive rates for deposits on their money, is that they basically will all go insolvent. So the Federal Reserve has created an environment where everybody always asks, well, how are they going to destroy the banking system and get CDBC in here, whatever? Well, Powell, by raising interest rates and by doing QT, is basically destroying the banking sector nearly in its entirety. The only banks that are going to be protected are the ones that are GSIBs. And I think this is happening really fast, Phil. And, we didn't put this in the charts, but financial institutions, what we call the non-banks, the shadow banking system, they're exiting the auto loan business now too. So it's going to get to the point where there's no banking, there's no loans, there's no lending, and the federal government is going to be hoovering up all available liquidity for themselves. Somebody put it very, very indelicately, say basically when Yellen has to go back to the well here and start selling bonds, we're going to basically get a $1 trillion kick in the pants. And the word they use were a little bit more colorful, if you get my meaning. Basically saying is that Federal Reserve is going to suck all the oxygen out of the room, and the banking sector is literally going to collapse. I'll throw it to you.
Yeah, I think the more this goes on, Bob, I'm of the mind that this is part of the plan, and to consolidate the banking. And I don't know why they chose now, but it just seems to me that, and I don't know if this is something they cooked up when they said, look, something we've never tried before to maybe help combat inflation is to consolidate banking so that we're dealing with less participants, and maybe that means they have greater control. I don't know, but everything that, all these conspiracy theories, you can't really say no to them, because, if you look at what's going on, it kind of adds up, right? So, I don't know if that's the case or not. It sure smells like it to me, Bob. And that's the only thing I can really come up with, is maybe it's just they feel it's easier to deal with, a lot less banks as far as the Fed's concerned.
Yeah, I mean, if you give them all the benefit of the doubt, they're just trying to curb inflation by getting rid of the extraordinary means. If you give them no benefit of the doubt, they're using this opportunity to take total control of the banking system, and that you have less choices and they can control you nationally. Because all these banks are basically, I think, in New York and Charlotte, and then Wells Fargo's, I think, is the only bank out here in the West Coast. So now you're going to be dealing with national banks for your local lending needs. And I think it's going to eventually I think it's going to become a political issue because Congress people like to have banks in their district that they can control, not have it all in Chuck Schumer's district or state. And I think it's going to become a big problem. But in the meantime, I think we're all going to suffer. If you guys need loans, I don't think you're going to get them. And, and if you're politically, active, these bigger banks could just shut you off completely. And I think that's, part of it too. How do you control the population? And I think this is one of the other tools they're going to try to use. But from an economic standpoint and a stock standpoint, this is just another Jenga block being whacked out, and it's coming at us really fast right now.
Yeah, and I think too, it goes back to, with our stock portfolios and how this is going to be affected. I think you have to just know that as the balance sheet continues to unwind, unless they're forced to expand it like they did the other month with the emergency bank lending window, other than that, they're still on a mission. In fact, the update this week, they resumed another large roll-off, and these weekly amounts that we're getting on the Fed tapering, the Fed rolling off their balance sheet, are as large as we've ever seen them ever. And so to me, it looks like they're playing catch up to that expansion that they had to do back in March. And this is going to have material effects on the market. I think this month was a bit of a, OPEX tailwind to kind of elevate things, and a bit of a short squeeze too. I think it was more short squeezing action than organic buying, if I had to, put my finger on it. But these things are short lived. This was very similar to what happened in 2008, right before the biggest part of the drop happened in the market. So there's not, like we've been saying, the indicators for most of this stuff is bearish, not bullish, or the start of a new bull market. We just don't see what we're seeing here. And I think that people get impatient, but I think those that have bought enough time, especially to hedge themselves, are going to start getting rewarded here over the next couple of weeks.
Yeah, and I'm looking at the home builders ETF, Phil. I mean, it's ridiculous how high it's pulled up. Mortgage applications are collapsing. Who's going to buy these homes? So it's going to be a really interesting couple of weeks. And then also from the option standpoint, going into the fourth quarter and the first week is that you don't have a lot of the liquidity behind to do the derivatives for the market. So, we should see some weakness over the next 2 weeks anyway, and see if it's going to be magnified by the debt and these banking issues.
100% agree. All right, guys, well, that's going to do it for this episode. Please let us know your thoughts down below. Love to hear from you. And we will see you on Monday's episode. Thanks for liking the videos, subscribing, and smash that notification bell if you can. Also, check out our specials over at tradegenius.co. Love to see you in the rooms. Thanks, Bob. We'll see you on the next episode.
Trade Genius.